If you're waiting for interest rates to drop, you're likely making one of the biggest financial mistakes of your life. And that's because waiting for interest rates to decrease could lead to missing out on affordable homeownership opportunities right now. In the next 10 minutes or so, I'm going to show you why interest rates aren't likely to come down anytime soon. We're also going to take a look at interest rate and housing price forecasts from some of the biggest names in the industry, along with showing you what the cost of waiting actually looks like when it comes to buying a home. So let's start by talking about why rates aren't likely to drop significantly anytime soon. And it really comes down to the economy. It comes down to inflation. It comes down to the job market. It comes down to the unknowns of what President Trump could potentially do in the future that might potentially lead to higher inflation down the road. And because of those unknowns, you have a lot of volatility out there in the market, which is one of the reasons that we've seen interest rates move from 6% upwards of 7% today. And the reality is, until that volatility is gone, interest rates are likely to stay higher for longer. As we know, the Fed has a dual mandate. One is price stability, while the other one is maximizing employment. And at the moment, it looks like we have a little bit of price stability. We've got inflation dropping from 9.1% at the peak down to levels right now in the mid 2% range, while at the same time, we have persistent wage growth and what looks like a strong labor market, which is ultimately telling the Fed that they've done the right things while remaining super restrictive. But at the moment, you have uncertainty in the market because we don't know what the future holds with the changing of the guard and how those policy changes might affect things like inflation. Therefore, you have the Fed now kind of backing off a little bit where they've been very, very transparent that they wanted lower rates. They're now saying that rates are likely to remain higher for longer.
The economy is not sending any signals that we need to be in a hurry to lower rates.
With that, you're going to have uncertainty, and that uncertainty leads to volatility. And until you have that volatility under control, we're not likely to see interest rates move down in a significant way. Now, I know there's a lot of people out there that believe that President Trump has some influence over the Fed, that he's going to come in and demand lower rates and that they're ultimately just going to drop rates. But here's the thing. The president doesn't control the Fed. Maybe there's some political pressure for them to do things, or in some cases potentially resign. But we've already seen the Fed push back saying that they're not going to resign and that they're ultimately going to stay course, which in turn likely means a higher Fed funds rate until we see a weaker economy. Now with that, I want to take a look at a couple of forecasts, one from Fannie Mae and one from the National Association of Home Builders when it comes to forecasts for 2025 and 2026. As you can see from this chart here, Fannie Mae is predicting interest rates to average somewhere in the mid 6% range in 2025. So an average means that interest rates are going to be higher than that for a little bit of time. They're likely going to be lower than that for some period of time. But overall, the average is going to remain somewhere around 6.4% according to Fannie Mae. Now, based on where we are today, interest rates at 7%, that means a lower rate. That means improved affordability a little bit, but that doesn't ultimately mean a lower house price. And we're going to talk about why here in just a minute. Now, in addition to that, we have the National Association of Home Builders forecast. Now, they're a little bit more optimistic, expecting that interest rates are going to average somewhere in the low 6% range for 2025, around 6.12%, with them dropping even further in 2026, coming down to 5.71%. So as you can see, their forecast is a little bit more optimistic, which in turn is a good thing. So why am I saying that you're going to regret waiting for lower rates if interest rates are likely to come down? Well, that's because at the moment we have a slower housing market. We have mortgage rates sitting around 7%. We're in that seasonality of the market where things are slow. It's that holiday season. Homes aren't selling nearly as quickly. Inventory is growing in areas. Days on the market's adding up. It's just a slower time of the year overall. And because of higher rates, you have less buyer demand out there. Less buyer demand means less competition, means home sitting, which means sellers ultimately have to reduce prices. They have to do something in order to incentivize buyers to come to them, which means in some cases lowering the price, some cases giving credits to buy down the interest rate, doing different things. We know that lower rates lead to more home sales. We've seen it in new home sales over the last year and a half as home builders have been buying down interest rates. And with lower rates in new construction, that added more buyer demand. And because of that, we saw new home sales grow at a more significant pace than existing home sales. So by waiting for lower interest rates, you're basically saying that you're waiting for more competition out there in the market. You're waiting for more people to want the same thing that you want, which in turn is going to drive up the price. So not only are you going to have more competition by waiting on lower rates, you're likely to have higher home prices as well. If we take a look at this home price appreciation graph for 2025, you have every major organization out there expecting price growth in 2025, with the high side being 4.4% and the low side essentially being flat, just at least in nominal terms. Now, these numbers are for nominal price growth. Now, we're not factoring in inflation in these numbers, but either way, home prices are likely going to continue to go up, with the average here sitting at 2.6%, which ultimately means there is a cost of waiting. So by potentially waiting, you could be missing out on some of the key benefits of home ownership. Missed equity growth. You're missing that potential appreciation by waiting for lower rates, trying to time the market. And with that, there's an opportunity cost when trying to time the market. Most people get it wrong. I had clients that sold years ago waiting on lower prices and lower rates. And guess what? They're still not homeowners today because they've missed the boat. In fact, they can no longer afford what they previously had because prices shot up, because interest rates shot up. And that's ultimately because they tried to time the market. Building wealth through home ownership happens over time. It doesn't happen over a day. It happens over years. In fact, if you look at this chart here, this is a 40-year chart of home price growth. And as you can see, it's mostly up. Now, there are a couple of times where home prices did go down. They don't go up in a straight line. But the key thing to note here is they do go up over time. And the more time you have on your side, the more you don't have to worry about those fluctuations in the market. Everybody wants to think back to 2008. That's everybody's go-to. Well, it's going to happen again. That's a once-in-a-lifetime thing. It's not going to happen again. And if it happens again, it's not going to happen like that. It's going to be something entirely different that causes it. But here's the thing. Even if you purchased prior to that time and you held on through that time, your home is still worth significantly more today than it was then. But the problem is that's not sexy. Everybody wants to buy at the low and sell at the high. And because of that, most people miss the opportunity altogether because they're constantly waiting for a better time in the market. In fact, it just happened with a lot of people that needed to refinance. A lot of people got interest rates in the 7.5% range, and they wanted a lower rate. Well, interest rates just came down a couple of months ago, and they were sub 6% for a couple of weeks. But here's the thing. A lot of buyers out there didn't take advantage of it. Why? Because they wanted lower rates. They wanted rates to move even lower because they didn't want to waste their time with saving just $300 or $400. They wanted to save $700 or $800. And guess what happened? Interest rates move up. And guess what? All of those people now are calling, wondering, how do I take advantage of the rates that I saw just a couple of weeks ago versus taking advantage of it when the opportunity is there. So here's my question to you. What do you guys actually think about that house price forecast? Do you think that's realistic? Is it on the low side? Is it on the high side? Do me a favor and let me know in the comments below. Now, I know what all of you are thinking. Jeb, you're just a real estate agent. You're just pushing people to buy homes. You just want them to buy a home so you make money. No, that's not the case. What I'm trying to get you to understand is that home prices go up over time. The sooner you can get in and try to buy a home, the better off you're going to be long term. Not only are you fixing your housing costs, you're also putting money into a forced savings account by paying down the principal balance on that mortgage. You're also gaining in appreciation instead of paying your landlord's rent every month. And in all reality, house prices aren't likely to shoot up like they have over the last couple of years. They're likely to remain steady, but steady to the upside. And that's because if you believe inflation is still going to be a problem out there in the market, if you believe we can't control inflation, inflation is going to be there, whether it's 2% or 3% or 4%, then if you believe that, then you believe that home prices are going to move higher. And that's because as inflation rises, so do the price of goods and services. And that's because the cost of building new homes increases with inflation. And as that happens, it makes existing homes more expensive as well. Now, maybe you're on the flip side of that and you think, no, inflation is going to go lower. It's going to go away completely. We're not going to have inflation at all. Well, if you believe inflation is going to move lower, then you likely believe that the economy is going to weaken, that we're going to have a much slower economy. And if you believe that, well, then that likely means lower interest rates, but at the same time, it also likely means higher prices because lower rates increases affordability. And as you increase affordability, we all know what happens. In fact, we saw it just a couple of months ago. As interest rates moved to sub 6% range, we saw existing home sales go up. We saw pending home sales go up. We saw this flood to the market of these people sitting on the sidelines waiting to buy homes. So lower rates means more competition. More competition likely means higher prices. So as you can see, none of these roads that we're talking about here ultimately leads to lower home prices. Now, I know what you're saying, all the keyboard warriors out there. Well, inventory is growing. It's going to increase significantly. You're just going to have all these homes on the market, nobody there to buy them, and you're going to have way more inventory than you have buyer demand, and that's going to lead to lower home prices. But here's the thing. Both presidential candidates that were just running for office both had a policy or something that they were trying to pass where they were going to free up more government land. And they were going to free up more government land so that you could build more houses. Why would you build more houses if we already had enough inventory out there in the market? And the reality is we don't. Yes, there are markets out there that have more inventory. Yes, there are markets out there that are softer. But nationwide, inventory is still a big, big problem. In fact, the forecast of next year is that the peak in inventory is going to reach somewhere around 800,000 homes on the market in October. Well, that might sound like a lot of homes on the market, but when you compare it prior to the pandemic, we were sitting 1.1, 1.2 million homes on the market. So we're not even back to those levels. Again, this video isn't about pushing you to buy a home, but my channel is all about real estate education and educating you on why homeownership is important. So if you find any value in this content at all, do me a favor and hit that thumbs up. But here's the thing, you don't have to take my word for it. Let's actually look at what the cost of waiting looks like on paper based on the predictions that we saw today. So for our example, we're going to use a $500,000 home. And let's just say you bought that home today with a 7% interest rate. Well, that's going to give you a mortgage payment of $3,326 a month. Now, you're going to have property taxes, depending on where you're located in the nation. That's going to be roughly 1.1%. Now, there are states, Texas and New York and Florida and some of these states that have over 2% when it comes to property taxes. But we're going to use 1.1 as the average, which means on that $500,000 home today, your property taxes are roughly $458 per month, which means your principal and interest with your taxes, that payment's going to be sitting somewhere around $3,784 today. Well, let's use the price growth, the average that we saw from that chart earlier. Now, the high side was 4.4, the low side was flat. So we're going to use the average, 2.6%. I think that's really reasonable for next year for nominal price growth. If we're talking about the real number and inflation is 2.6%, you're basically flat, but either way, home prices are getting more expensive. Well, that would take that $500,000 home and increase it to $513,000. Now, assuming interest rates stayed the same, that means your mortgage payments increase into $3,413. Your property taxes are also going to go up a little bit because your home just got more expensive, and that's going to take them to $470. So essentially, your housing payment's going to go up by 2.6%, which now has you sitting at $3,883. Well, let's say again that it increases 2.6% the following year. Well, now that same $500,000 house is now $526,000. And your total mortgage payment's now $3,984. And then if we go into 2027 with just a measly 2.6% appreciation, that same home's now $540,000 with a mortgage payment with taxes almost $4,100 per month. Now, if we took the high end of that forecast at 4.4% appreciation over the next year and just said that's the same over the next 3 years, that $500,000 home becomes almost $570,000 by 2027. Now, you can say by waiting, you could get a lower interest rate, which ultimately would bring that housing payment down. But here's the thing. If you bought that house today and locked in the price at $500,000 at a 7% interest rate, and interest rates move down to 6.5%, 6%, then you could likely refinance, assuming you can qualify and take advantage of those lower rates while fixing the housing price. At the same time, there are some things you can do with interest rates to buy down your rate temporarily, to do an adjustable rate, to do different things to make it a little bit more affordable. Remember, buying a house should never be about fear of missing out. You're buying now because you're worried about something in the future, missing out on potential appreciation or something like that. That's never the right time to buy a house. You should be buying a house when it's the right time in your life. When you have financial stability, when you have family stability, when you have job stability, all of these things is when it's the right time to buy a house. And it's not the right time for everybody at the same time. It varies depending on where you are in your life stage. So this video isn't a push to get you to go out there and buy a house, but it is a video to kind of bring some clarity to those sitting on the sidelines waiting for the perfect opportunity or waiting for interest rates to drop and house prices to drop at the same time. So rather than focus on interest rates trying to pick the top or the bottom, do yourself a favor instead and buy when it's the right time in your life